Skip SPX and take the Russell. That was the system's read on Monday. Same morning, same software, two very different scorecards. So here's what happens. Ahoy there, it's Phil. There's three things for us to walk through on today's quick video. Why the expert advisor called a plus setup on SPX, why the expert advisor called a skip on the Russell, and why the Premium Popper split SPX and Russell today. So we're going to look at all of that, plus we're going to look at the analysis for the upcoming session. So overnight, the tape basically in one shot. The indexes did rip higher, as we can see there. Yesterday, again, we didn't really see much more follow through than what we saw in the overnight futures, but we are starting to see some pushes higher, a little bit elevated more than normal. Again, 0.3, 0.6% is normal. S&P, well, that was yesterday, my apologies. That was the close yesterday, my apologies. So 0.19%, 0.3, 0.27 and 0.26 at the time of that screenshot. So again, 0.3, 0.6, that's kind of like the normal realms of an overnight pre-markets movement. So again, we're not doing anything extraordinary at the moment. Again, a little bit of a bullish twist, so I would imagine that would continue going into the day's session. Now, S&P, or the SPX specifically, keeps on swinging. Looking at the daily charts, we can see that we've got price just stalling at that 73.30-ish level. Again, just those prior support lows. Looking at the closing prices, we could argue 73.50. We could finesse and fine-tune that. Again, we can see that the last few days we have seen price just consolidating intraday. Arguably that we could draw a box around that and we could look at breakouts. The software has taken care of it. We've got a brand new tag and turn setup. We've got the V add-in. The new and improved software says that this is now confirmed. Again, we've got a nice stack of all the quality checks. We're looking at about 32, 33 different metrics behind the scenes. I'm looking at adding a few more. As you know, I'm experimenting, or to be fair, re-reviewing the percentage argument. It's had its own system in the past, so I'm just trying to integrate everything that I know and do and lean on AI to research these things and see if there's an opportunity. Should we include it, should we leave it? Just for the moment, if we look at it on its own, we are in that bullish extreme there, and we are riding the upper Bollinger Band. So, we can look at both those things as confirming that we're in that early stages of a strong trending movement. MACD V is not quite there yet. It's not saying that we're at an extreme of trending movement, but we are clearly riding that band up for the moment. And again, a little bit of a push higher in the pre-markets. We should see that continue, clear yesterday's highs, and then we should see that continue on higher. Uncle Russell, again, same software, different chart. We can see we've got this consolidation. We don't need to mark things off manually. I'm going to try and actually integrate this. It has been previously, so I'll be looking at doing it in the future, so we've got these automated. But basically, it's marking these things off in the background. The setup that we do have here, it's going to mark off the setup anyway. The new software is going to give us an assessment, and what this is saying is basically skip the trade. There's not enough data to provide an edge. So yes, we have the tag, yes, we have the turn, but just given the dozens of metrics that we have going on in the background, it's saying, this is not great. Maybe we want to skip this. Now, practically, we are seeing price go from the range low, from the range high. And normally on the swings, what I tend to do is I normally tend to wait for the breakout when we have a consolidation like this. So the software is picking it up quite nicely. Alternatively, what you can do here is recognize you're in a range, recognize that we've maybe got a shorter duration type of trade. The profits, to be fair, with options, the profit potential is the same. It's just we might want to reassess the duration. So dropping down to a 10-minute chart will keep you in the game rather than on the sidelines if you want to wait. So 10-minute chart, 1 day to expiration, trade from the range low to the range high, and you'll have that same setup highlighted quite nicely. Now, over on the Premium Popper system, the SPX Popper for Monday, the direction of the setup, the initial trade there, we can see that first breakout, The initial setup was bearish, but the grading for this was basically -2. It's a reduce your position size or potentially skip the trade if you don't like it. Again, the setups are still going to work, and as we can see, it did move directionally. But what you want to do with these lower expectation trades is keep them on a tight leash. In this case, it went straight down to the small gap that we had from the previous day, and then just tagged the 2-day VWAP before turning around. So again, if you are taking these lower quality trades, keep them on a tight leash. Many of the traders did. They're reporting successful trades in the Slack community. So again, you can still take them. Just be aware there's a caution, and it's saying that this is a lower quality trade, and we might want to just reduce the expectation of the trade. Now, the opposite to that was the Russell. We can see that we had that bear setup. It was a great scoring metric here. We had lots of favourable conditions. Again, the software's calculating a lot of things for us in the background, but we have that breakout. It's given it a great scoring, and it just popped and dropped quite nicely to its option targets before reacting. And if it didn't get out on the first push down, certainly that reaction to the VWAP would have given you another opportunity to take some profits with a little bit of time decay factoring in. Most of the students traders are reporting again another great win on both SPX and Russell for yesterday. The software assisting them to a high degree. So ultimately, it's pop, drop, and done. Pain-free and in the green by the end of the day. So if you want to collect morning income, or if you want to collect weekly income from the systems that I'm describing, then check out the links in the description. So that's it for the day. I'll leave you with the meme of the day. Whatever you're up to today, make sure that you do your analysis and you plan the trade and you trade the plan. Don't make it up as you go along. That is the road to disaster. And as always, if you've got a systematic, methodical process to find, filter, and sort opportunities, then use that. Don't try and second guess. I mean, I've spent the last 30 years literally trying to systematize my decision-making process. And this is the outcome of it. We've got software that's basically saying, here's all your thinking, place the trade. Trying not to second guess anything anymore and just place the trades, because as soon as you start thinking, more importantly, thinking that you're smarter than the system, then that's the recipe for disaster. So follow the process, follow the plan, and you'll make money long term. That's what this game's all about. So hopefully your trades are going to be smoother than a cashmere codpiece.